So I'm here to come to sell them again. 9.5 straight night, 20 straight night, even straight here. Now guys eat halves are
Hey, what's going on, traders? I'm going to be doing some quote board or watch list charting today in Sierra Chart. It's kind of the end of the week since equity markets tomorrow are going to be closed, so I am just going to be chilling. Anybody wants to chat or ask some questions or get into some other conversations about trading or non-trading, whatever, I'll be watching the chat while I do my thing here. So I am, without further ado, I'll just get started. Working on the SPY daily. I like this setup here. If we can pop above to say about 415, 420 on SPY, get some FOMO action, I would be looking for a short to retest 405, 406, maybe 400. You know, April's historically a bullish month, so maybe we'll get it. And they're talking about new stimulus, but anyway, as far as the technicals go, I like this breaking up. Most strong trends, by the way, are sort of these rising wedge patterns. That's just how trends typically morph, and oftentimes they turn into channels, right? And then the channel plays. But in terms of a short term, I like this trend line breaking, going higher. Then I'd look for a short and I'd hold it, and if we get massive selling through the trend line again, I would be taken off, but then I'd also be looking to get back short again if we came back through this area into probably 395 or something like that. But anyway, it's a nice pattern setting up here. Here we'll switch this from 5-minute to a 30-minute chart. 30 minutes nice because it allows me to look back over about the last 2 weeks. Yeah, this is nice. And we could put some short-term trend lines here. All these ghost wicks here. And then extend this line out. Extend it. There you go. That way you don't have to worry about, you know, going into the future, keep extending it or whatever. It just extends out into infinity. So anyway, I like a break here. Probably a little pullback action around 403, 404. Might even pull back here. We'll see. Nice century figure type number of 400, but I like it going a little higher. You know, price often does what we don't expect it to do. So I like it pushing up to 404, 405, going a little higher, getting all the stops with this daily trend line, really getting everybody worried, bullish, etc. And then pulling back. So hopefully you guys could hear me here. Yeah. Well, it looks like there's very few people here, but okay, cool. Works for me. Doesn't matter if there's 1 or 20 people here. I'll just do my thing. All right. QQQ is breaking out of the daily sort of downtrend. We had that a few days ago, marked up pretty clearly. So I like QQQ filling the gap. So what we're going to do is we're going to get rid of this. Well, here's what we'll do. Forget that. We won't get rid of it. We'll just turn this into something else. All right. Let's see. And we will go TC1, and we will call it 4-1 gap. So it goes into the narrative moving forward. All right. Nice little breakup here. So instead of drawing the bottom part of the trend line, we're going to take the tops and we're going to go like this. And then we're going to go to the bottom like that. I think that's going to give us a more accurate method of measuring price moving forward in this channel, right? Because strong impulse, another strong impulse with the gap. So I would say this is more resistance defining the channel rather than defining it here, because you know we're in a phase of sort of melt up, break through this, you know, get all these shorts to cover here, right? You just broke this, so it got more shorts today. It is very likely that we have some profit taking from longs here. Doesn't have to, but I think it's going to happen. So we would want to know if this bottom area becomes support. Yeah, these are, I think, phantom wicks. I don't know. Probably a block trade or something like that. Anyway, let's move on from this. Oh, IWM. Let's get through the indices first, and then we could move with more speed. So let's look at the Russell. Hey, broke the downtrend. See that? So that's nice. We had that from a few days ago put in there. Right? So these little trend lines, when they break, it's nice. We had this as resistance. So you see, just based on this area, we thought, okay, top of resistance. And where did it go? Top of resistance, and then into the close, it pulled back. So, you know, if you caught the top, 222 to about 2, so about $1.50 profit if you kind of scaled into the short. Either way, you would have gotten out with some profit here. So for a scalp, right, it works well. And especially on a day like on a day like this, right, where it pulls back and then makes a strong move and then kind of a little parabolic move into the close. On this sort of day, you can be patient. You don't have to enter early. You can wait for it to go take out all the stops above here. So that's what happened. And that's why you had this candle here. It went up and then a strong pullback, right? So intraday you would have already made money on this just by playing. Oh, okay. Get short, the pullback. So, you know, you're talking 221.50-ish, let's say you got in, and 220, you know, to find support, you know, you're talking 220.96. So 40, 50, 60 cents. And if you're playing options, you know, you can make some money with that. So it's a nice move. Anyway, let's go look at this here. Higher time frame. This is what you call, well, I thought it was something. It's actually not. I think this turns into a diamond reversal, but I'm getting way ahead of myself with that. Yeah, just a chop range. So we're in balance up here with the Russell. So we'll call balance, right, like this. All right, so if we break below, all right, well, Maybe target 183, break above, much higher. Maybe 250s or something like that. So nothing too crazy with the Russell. All right, let's move on to the Dow. The diamonds. Man, I am so tired today. I live in California. It went from 70 to like 90 degrees today. So out and about outside doing stuff, and that heat is just draining. So the Dow is doing a much longer term rising wedge, which I like actually. The shorter term rising wedges are of less interest to me. So we'll call it like this. Right, if you did this, right, that you could say 1, 2, 3, and then a failure. But now we're coming back through it, so we won't keep the trend line like this. But just recognize, you know, if you had drawn this trend line like this, you could have shorted, right? Because it's a little rule of 3 kind of action. And, you know, you could have shorted anywhere above 331s, 332s. You know, you just kind of see what the price action is looking like. And then covered for 2 or 3 points. But, you know, obviously you would like to catch 10 points, but that's a little unrealistic. It did hold this high here. See that? So we'll see. We'll see how it goes. The fact that it's moving back up through this trend line probably means it's going a little higher. It's not quite as parabolic as everything else. So we'll oh geez. We'll move the trend line up for that reason. And just say that's trend there. Important to put labels on this stuff too. Weekly trend line support, right? That way it shows up on your intraday chart here. See that? Weekly trend line support, daily trend line support. It's all just based on these charts and sharing the chart drawing. So that's important. Let's look at the 30-minute a little bit more here. What I'm looking at here is the point of control. Any rules? So Yasha's M asks, any rules on when you use tops for trend lines versus bottoms? I'm not sure I understand the question, Yasha's. Anyway, let's go back to, and I'll keep an eye on the chat a little bit more. Just looking at the daily, I do like to look at this sort of short-term trend, because oftentimes what you get when you draw a trend line here, once it breaks, it comes back into the channel, so you can kind of go short, right, and look for just a little bit of profit in an area to go long, right? So I do like putting a trend line here, which would be optimal on the 30-minute here. So we'll go like this, right? So there it is. And I want to make sure when I draw my trend lines, it's going to cover the next 5 trading days. So tomorrow's not a trading day. So anyway, we'll extend it out here. Let's do it this way. Extend it. All right, and this actually may be scaled. No, it's linear. Okay, cool. Anyway, it'll show up next week. So if that breaks, you know, maybe we'll be looking to stay in range with this daily trend line support here, rising up. So we'll look kind of to get out and go long somewhere in this area. For now, it's just balance up here, right? We could say this is balance, and then it runs into trend line support. So if it bounces a little before that, if you do get short, let's say up in here, You've got first cover at maybe 326, so a dollar something below at POC, and then somewhere in here. So this is an old drawing. We'll get rid of that. So moving on, go a little faster with the equities here. Oh, okay. Yeah, sorry. You drew 2 pair lines earlier. So I thought I tried to explain it, but maybe I didn't. Where did I do that? Was it on, what was it, QQQ maybe? On the 30-minute? Let's see if I could explain it again. Okay, so I was definitely talking about and trying to explain it, but maybe or maybe you weren't here, but essentially, because we already have a strong impulse off this low, okay, this is a trend line. This is this yellow trend line here on the daily. When we break this, we have a strong impulse, right? And then we get resistance, right? Then we pull back, but it's not a pullback all the way to the trend line. Yeah, we just get instantly another gap in the overnight session or pre-market, and then it gaps up again, and then it finds resistance. Okay, so because of this, I don't see where we've actually found support in the trend, right? This move is already too parabolic to the upside, so you're looking to determine where your resistance is, because based on the trend that it's moving up at, or the rate of change that it's moving up at. So what you're trying to do is you're trying to find where it's resisting now, and trying to find sort of the angle or the trajectory at which it's breaking out. And so because it hasn't had what I think is like a strong pullback yet, and really found some sort of support on a strong pullback, I'm defining the parallel by what is resisting, if that makes sense. I hope it does, but that's my explanation for that. Plus, if you were to take this lower trend line, or this lower area where it sort of broke out from, it's not really support, is it? Right? This is an uptrend, so it's not pulling back into support, right? It's pushing up out of consolidation, right? This now becomes a pullback, I guess, support, but like here, it's not really pulling back that much, right? Like, you know, in a sustainable market, you want to see something like this, right? And then maybe it pulls back 50%, and then maybe you have a really crazy day, then it pulls back and kind of generally makes a higher low, and maybe violates this a little bit, gets a bunch of people who stop out here, and then the pros all buy here, right? And then you make another move, like, right? And then you start to see like maybe a channel or something. But in this case, you know, I could even draw this channel a little bit wider. You know, I don't know exactly what these wicks are. You know, I think they're just block trades. That's what I think they are, so I don't think they're that important. So in this case, I choose to define the trend line from the tops and then make the channel about this wide. But I think if we kind of go back and say like, well, when it's in channel, how wide is the channel? You know, we can kind of form some rules, can't we? Right? We can say something like this, right? The channels tend to be about that wide. Oh, then when they violate, okay, they make a move down. And then we could say, okay, the channel is about, oh, I don't know. To the downside, they tend to be a little bit more narrow oftentimes. You know, price moves down, often moves down with velocity, right? You could say here, it's coming up it's coming up into a general trend line, so it's struggling, it's still in a downtrend, so the channel is wider. But now when we break, I know there's a lot of lines here, so let me undo them. Oh, that's all right. All right, we can do that. Now that we've broken this downtrend line, people are a little bit more frisky, right? They're excited to buy, so you can see that the buying is moving up at maybe in a narrower channel, and you could kind of see it in the price action. Consolidate, strong impulse, consolidate, not even 50% pullback, strong impulse, not even a 50% pullback, right? Already, so you could say like breakout, measured move to here, pullback, measured move again, doesn't even pull back 50%, right? So I'm making the channel a little bit tighter. That's discretionary, and that's based on what's happening. It's the context of this downtrend line being broken. So that maybe you didn't need to know all that, but certainly I think hopefully that's educational for you, because context determines how powerful oftentimes a move is. So anyway, there you go, Yashas. I hope that's helpful. All right, let's get back to what was it, Apple? This takes a lot longer when I'm talking, but that's all right. All right, so Apple at some intermediate resistance. It's hit it once, twice, 3 times, failed here, made a higher low, made a lower low. So I would say Apple is channeling. Broader context, Buffett sold some Apple a while back. People are less interested in holding Apple, the Buffett acolytes. And this is where we're at. So I kind of keep that in the back of my mind, that a lot of people are less interested to buy Apple since Buffett took some off publicly. So he's a legend, and people do, you know, if you kind of look at this on the weekly, Apple could be forming a head and shoulders top. I know it's a little early, but you know, the markets have been moving up and Apple's relatively weak. So, you know, you could say Apple's in a sort of a balance area here, right? Kind of tried to break out, it failed. Okay, so it's in a balance area. Here's the 200 period moving average. If it loses the 200, often you get stops underneath the 200, goes a little bit lower, and then, you know, sort of the value folks come in and buy it. So if that happens with Apple, right, and we lose the 200, it's still going to be in balance, right? Kind of something like this. It's still going to be in balance even if it comes back here. So it just wouldn't, these things take a lot of time to move, man. There's a lot of big investors in Apple. So if it comes down, you know, let's get rid of this. Let's say it comes, it comes down here. It's in balance. That'd get a lot of stops. So if it comes in on volume, breaks this, indices are still fairly strong, say ranging out. It's a little bit of a timing thing here, but you know, again, short term, this is a consolidation area, not really breaking up with the markets. It comes down, gets a bunch of stops. It would not surprise me to see a bounce somewhere. And if the 200 is starting to kind of flatten out here, and it flattens, it flattens, it flattens, it wouldn't be surprised if we see resistance at the 200. You can look to go short, you can look to go long here, right? Take off over the 200. If it keeps going, I'd probably look to see if it makes a lower high here and then rolls over, right? And depending on how long that takes, you know, that might be timed with rising interest rates as well. So, you know, that'll affect a lot of things. So it's just sort of the way I think about these charts is not just the technicals. I'm trying to pair it with a little bit of the fundamentals, bonds and everything else. So just to get a kind of a broader picture. Oh, okay. Oh, sort of these what if. Yeah, you know, it might just break up here and keep you know, it still has, it's made a higher high. This is a higher low. So, you know, Apple could just do this right now. You know, that's possible too. But I like these other scenarios first because everybody would get bearish, and I tend to be a contrarian. So that's my thought on Apple. I don't really have much of a play here on Apple short term. You know, what are we going to do? Go short for what, 2 point? It's not moving enough for me. Maybe you sell some premium here, sell some calls or something, you know, and buy a like maybe a 128 call to cap your losses, so you know you get a little bit of a credit here. And yeah, that's one way to do it. All right, Microsoft here. Boy, this is going to take way too long if I talk it all out here. Hey, Microsoft looks pretty strong. At a measured move, though, wouldn't be surprised to see some sort of pullback to 240. But, you know, on this daily, this kind of move can always lead a lot higher, and we're in the lower part of the channel here, so it's got room. But some sort of retest is likely. Plus, you know, I like to look at it as, you know, measured move, right? Measured move to the downside, right? It likes to move in 10, 11 point increments. So stocks and people who play these stocks regularly, they all have memory, right? The people who trade Microsoft, the market makers. So, you know, they're going to be thinking, well, I'm going to take some off here. So, and that might cause a bit of a pullback. So, that's what I'll be looking at. Amazon, it's gorgeous. Beautiful for upside. Amazon does not like my volume by price study setting. It's lagging a bit. I'm just going to keep, I'm going to be looking at Amazon Monday morning, just because I like the chart to the long side. Oh. Here, let's nice breakout with Google. Strong today, huh? Strong, strong, strong. And you know, when a stock moves like this, pullbacks, comes back, pulls back, and comes below the previous high, gets a lot of, it flushes a lot of inventory, right, or supply out, right? Kind of did it twice here, and this made it's a tricky play, huh? Comes in, makes a higher high, lower low, and then a higher high, right? So this kind of move usually leads to more sustain, and then like here, just holds it, breaks out of balance here, another balance area. It can run a bit more. It can run a few 300 points more or something before it gets really toppy. But you know, if you look at it from looking at it from the perspective of it's in a parabolic advance. All right, we'll do this for. You would expect maybe one more impulse here. So again, thinking about timing and equities and interest rates. How long is it going to take for that? How crazy of a move is that, right? Go back to SPY, go back to the E-mini. You know, I like the 4200 area for a bigger short opportunity. So think about bonds and interest rates and the economy being juiced by stimulus and all this other stuff. Is that sustainable? Right? What ends up happening with inflation and people buying shit they can't really afford, but interest rates are low and they got free money, and think about all those things, right? I am a technical trader mainly, but I do love to use a lot of fundamental analysis to time the markets a little bit better. So the technicals on this are strong. So moving on. Facebook breaking out. We had it. 279 up 20 points already. So Facebook, right? One of the top 6 or 7 market cap stocks in the S&P, and are they in the NASDAQ as well? I think so. I don't really pay attention much to that, but anyway, moving up. Looks good. So let's look at the 30-minute and see the way that this may move. Right? Facebook tends to move and pull back. It's a nice stock to trade, isn't it? Gives you lots of opportunities to keep buying in an uptrend. So, maybe keep that in mind. And what's the rate of change when it does start to make moves, right? Say on the 30-minute, right? Let's look back, right? So this is a pretty strong trend. This is a pretty strong trend. Okay. This is probably, when it does start to make moves. Okay, this is the V bottom low. This is a broad daily sort of area. It's going to run into resistance here too. So, let's see if it can take out that all-time high. You could also say oops. Today it kind of struggled, didn't it, as it got up there. Maybe that's not very exact. A little bit higher. There you go. So, a little bit of a pullback on Facebook today. Look at that. Started strong. Kind of struggling, despite the E-mini just ripping. So that's nice. It's nice to consider that this is doing its own thing, even though the E-mini is strong. The NASDAQ fairly strong today, right? So very nice to realize that the technicals here, when the market starts to move, the technicals still matter. Right? People get scared about that. They're like, well, the E-mini's ripping, the NASDAQ's ripping. Maybe I don't want to go short, right? Or, it's at resistance. So maybe if it hits 306, you play the short side 306 to, I don't know, pull back to 303.75 or something like that. On a intraday swing, if you feel like you've gotten some sort of parabolic move above, as long as there isn't a fundamental driver, if it's just technicals, if you've gotten some sort of parabolic move through resistance, you can play that to kind of come back and test support, right? Or you think it's going to punch it, like it's curling up here in the after hours. Okay, well, go long and take off before resistance. That's my style, right? I don't look maybe TP1, TP2, hold a little bit and then trail your stop. So if you get the move outside, great. You catch some of it. But most likely there will be a pullback test to all-time highs. So, you can think of this as one big balance area, or you can look here at, hey, obviously it was in this consolidation. We've broken that. So, the next logical place is here is resistance. And then if this is balance, you're talking about 350. So, might make a big move. And depends on your time frame. So me, I'm more short-term swing trading or day trading this stuff. So that's just my style. I find I make more money than a small position and riding the full breakout, because oftentimes it comes up, comes back in, stops everybody with tight stops, right? Maybe the volume profile kind of widens out and over here over the next few days or something. And then, boop, that's support, gets a bunch of stops, and then keeps going or something. Anyway, let's go put right. I like it. So, look to go short in this area, right? You get a little short-term rule of 3. See that? Markets, that rule of 3, man, is really powerful stuff. So, if it comes back up and we get some sort of crazy move and then it comes back again and then it make another move here, you know how many stops, short stops are going to be on this side of the trend line? So it's going to, and you could look to, enter short here. Depends again on the move. How many days are the E-minis maybe up at this point? 3-4 days in a row up big. So there's going to be some profit taking. So the general market might be weak, but this might be breaking out of the trend line, doing its own thing technically. And you can look to go short and, maybe pulls back up into this area. So, you might short the 311 to 314s, something like that, looking for 5 to 8 points or something like that. So this is a nice setup, actually, very clean. And again, my trading styles, I'm not, this is very unorthodox. For most people aren't going to be trading this way. They're trading the breakout, right? Oh, there's the breakout. But I look for opportunities where the majority are not looking for opportunities. So I'm trying to play where the bigger money is playing, right? Where they're taking off profit, because they know that most retail traders are taught, hey, you get a defined channel or something and you get a breakout, take the trade. So retail piles in above trend lines, and that's why big money is able to sell into that liquidity. So, and then just consider the move, right? Even if you're thinking Elliott wave, 1, 2, 3, 4, 5. So 1, 3, 5 kind of move, and you get the third trend line. So it's powerful. So I like to do something like this. When I come back and look at it, I'll be reminded of what my idea was if I do something like this, right? And then maybe put some text in and say potential rot. Okay, so I'm talking a little more today, so maybe this is useful. All right, so something like, oops, come on, there you go. Something like this. And I love to short the parabolic moves. I mean, you can kind of see. Look, I'll show you. You'll see. You'll see what I'm talking about. 1, 2, 3, right? So you get this move. And then it goes again. So this is during RTH, regular trading hours, rule of 3, right? You get that 292, and then the pullback is 289. So 3 points, 4 points. You can make some money there. Again, maybe it's not as much money as some of the degens who say, well, put your whole account on this move, right? It's in this channel, and it's pulling back and it's looking strong, and I'm buying the dip, and boy, I'm gonna hold it, put my whole account on this move and pray that it keeps moving in this uptrend. No. For me, it's defined risk with high probability, right? And that's the other way of playing is just unrealistic. That's how you get wrecked. So for me, I look to take out high probability swing trades or scalps using some of these types of methods, I guess, or strategies, right? Some of these, and you'll see if we come up here, and as we come up, it just keeps moving and there's no interest to buy. So the positive deltas go away and there's just a bunch of negative deltas, but they're allowing it to move up, right? They're most likely just going to sell it down and look for liquidity again, because they don't want, smarter money doesn't want to just keep buying higher highs. They don't want to just keep buying here. They want to buy pullbacks, right? That's just how it works. And we're left going, okay, what does a pullback, what does a pullback that's not going to fail look like, essentially? So it's not always perfect. Anywho, moving on, Tesla. Hey, what do you know, right? I say we. I charted this a few days ago. And what did I say? 689 to 691. Good short. Why? Because longs are going to take profit. Well, got a little more. But, intraday, if you have a small account, you can take defined risk in this area, right? You can say, like, okay, if it breaks 700 plus or something, then I'm out. So this is a nice trade because of the trend lines, because of how it's breaking out just a little bit here. But what's nice here is that this structure it's not, even though there's this perfect trend line to the downside, it's not like we're making higher highs here. So it's a very shortable area because you're just peaking above here. It's, you're still under the overhead on the weekly, 10 SMA, right? You still have this 50 period moving average curling down, right? So Tesla's still not that bullish. It's just not. And you look at it, it's just made a crazy move. Just a crazy move. So when stocks make these kind of moves, oftentimes, you get some sort of move where it bases for a long time and then it starts to make a move. Not unlike Bitcoin, right? 17K, way overdone. Pull back to 3 or 4K. Base for a long ass time. Big money accumulates, and then you get that, action at 8 or 9K where the pullbacks are now higher lows, and then you could buy. So if you followed me on TradingView or something for Bitcoin, that's what I was telling everybody. Buy the pullback. If it hits 11 or 12K and it pulls back to 8 or 9K, you buy. That's where you buy, because now you're making, it's basic shit, Dow theory. Higher highs and higher lows. But don't buy in anticipation that it's going to go there, at 4K. Don't, because you don't know. It might trickle out and then, just keeps, it just keeps the, let's see. It might just, this is what Bitcoin did, right? Right? So it's not really making lower lows, but it's not making higher highs either, right? So sometimes these kind of things just do this. So don't buy in anticipation it's going to, make new highs or whatever, unless, you have a fundamental reason and you want to hodl or something. But, when it made a higher high relative to this area and then it pulled back and made a higher low, well, it's a new trend. So then you buy. And I know a lot of people that made a shit ton of money off of that recommendation from me. So, oh, what am I doing? I'm doing it the slow way here. Oh. All right. Anyway, I'm not tooting my own horn. I'm trying to say this basic stuff works, is what I'm getting at. So anyway, this was an intraday channel. I don't need it anymore. That's all it was. I was looking for it to possibly, intraday I was looking for a rule of 3 coming down, getting a bunch of stops, but I was hoping for it to happen here and then come back into the body and then break the trend line. Then I would have bought here, had it done, made a rule of 3 on the downside, and then just had a tight stop here. And then just held. I would have taken off TP1 at the trend line, came back into the body, I would have, and it pulled back and then started to make a move up, I would have added it back for a break of the upper trend line. If it broke the upper trend line, then I would have just taken off. So here, I'll show you on a lower time frame. Already got rid of my my trend lines and stuff, but let's see. Right. This is what I was looking at intraday. Right, and this. And what I was wanting was this. Right. So remember, all this hadn't happened yet, and then we were somewhere in here, and it was coming down. And what I was wanting was for it to break like this, and then I would have bought anywhere outside of this trend. Not right away. I would have just bought any kind of move where I could see stops getting hit. I would have bought on those stops, or attempted. I probably just would have hit the ask, drug my orders up until I got fills in here, and then just scaled out, looking to average into this area with the stop down in here. Right? Because if so the reason I do that is because if all of a sudden the breakout becomes, you could say like, okay, this is a balance area right here. It comes back up, it rejects from this balance, and then it keeps going. So if it broke this balance area, right, this is the, if you consider this sort of, here, let me add more trend lines. If you consider this like a consolidation area, right, and then the price, so this red line, it moves here, but it goes further, right? From here to here is like a balance. So this is a measured move. So it kind of ends here. And then you have the rule of 3, right? So if it goes further, it's probably, the chances are, is that it's going to gain momentum and just keep plowing into the close. That's why I want to stop. I want to be scaled in here outside of the trend line, but then I want to stop here, because now you're talking about balance is from where it broke out of balance, it's expanding beyond that. See that? So if you kind of, here, if you do, let's see, we'll make it green, look at the balance area. I'm not so sure it's super clear to people. Right, and then balance, right, and then getting long, anticipating to rip the stops back through this area. I would take off. My TP1 would be here, right? And just depending on how the price action went, I might re-add in this area, right? If I could see that shorts are getting squeezed, they're getting really aggressive trying to cover, I might just go hit the ask right in this area. And I know I'm competing with all these short breakout traders. And if I take initiative and hit the ask, I know from experience that, they're waiting. They're trying to, they're trying to cover here just on the limit. Like, okay, Tesla's weak. Okay, no, I'm just going to go hit the ask. I'm going to go take initiative. Right? So if I can see that, and then we plow back up, right? And at this time, here's the trend line. If we come back up through this trend line, now all these long breakout traders are going to get long. So if I, again, buy the pullback off that initial rejection, because you almost always have an initial rejection, there's going to be longs trapped here. If it doesn't, well, then shorts are really, really fucked. And you just add. Okay. So then you're going to get all these long breakout traders. Then you add. And again, as you get too close to the close, the chances of coming all the way back up are slim. So you got to start thinking, well, where do I get out here? Here's the 20 SMA. Okay, the 20 has not acted like resistance. VWAP hasn't even got there, so it's kind of weak. Okay, well, I want to be thinking about the 50 period moving average, but right about this area. Well, where's the confluence then at this time if it breaks up? Well, the confluence is the 50 is lining up with this area, which would be resistance, right? Because lots of folks went long here, and right, they didn't get the compensation probably they were looking for. Probably some double bottom folks. Oh, failed breakdown, and then TP1, and then they're hoping for TP2, and then it comes back, it consolidates, it doesn't even get there, right? So you're just thinking about, okay, who's trapped up here, right? And then this bottom down here, going back to this area, does this occur on volume? Right? It's kind of like the E-mini I talk about the close. If the close kind of comes down, right, it's a bar, and it's a fat candle. Let's think of the width of the candle as volume, right? Maybe the normal close is like this, right? Not much volume, but then it's like, we get a close. In Sierra chart, these would be called volume bars, right? So they're wider if there's more volume, but there's still a candle or whatever. But so if this bar here is a big fat volume bar, right, and you see volume spikes and it doesn't go anywhere, that also changes how you're going to take I wouldn't take profit even here. I would just buy the pullback. I wouldn't even take TP1. If you get like some sort of tiny reaction, I'd just put limit orders here, right? Wouldn't even try to outperform by selling. I'd just add to the position, especially if it came back in with velocity. If it pulled back at all, I just have limit orders scaled in, waiting to get back in. And then you might get a huge move. But this whole move works better if it happens halfway through the day, right? Because now you have more time for this to be kind of a V reversal day. This, you just had heavy volume selling, essentially, absorption at the open. So it's going to be a much more difficult move to this kind of reversal is much more difficult to accomplish into the close when all this volume has already occurred and you have less time. Why? Because you need more of a parabolic move, and that's a less likely move than a sustained, this move happens middle of the day and then it just kind of makes higher lows and higher highs into the close, and maybe you take off into this volume node or something or maybe even the LVN at 680. But even so, you're talking about, if it had come down here at this time, you're talking about a 20-point move. That's a nice move. So anyway, I know I got a little distracted here, but maybe that's useful. Again, you can rewind the video. I think I cover this if you're just getting online here. I cover this with some amount of depth here in the last 15-20 minutes or whatever. So anyway, Tesla still kind of weak, right? You could even look at this as sort of this channel breaking. I do spend a lot of time trading Tesla, so I like to spend a little more time on it. This is a very nice stock to trade with the technicals, right? Big expansive move. Where did it hold? Till it kind of rolled over. Somewhere in here. So Tesla not looking too strong. It would not surprise me to see some sort of move. So now with Tesla on the downside, we could draw the channel. So Yasha's and was asking about drawing the channel from the top or the bottom. In this case, I draw from the bottom. All right, something like this. That's what I would be looking at. So if we come up with Tesla and kind of come in here and then maybe roll over, we'll see. We'll see how that goes. Do they have their delivery numbers? Does anybody know? Let's see. I have Thinkorswim open. I'll take a look here. Not yet. Not yet. So it's coming. And that's gonna, though this pullback here, if these numbers are kind of decent, you want to be looking potentially, if we pull back, still in the uptrend, might get a little bump here as it hits the apex of this triangle here. So Tesla may set up for a nice long, we'll see. If it pulls back and the numbers are good, you got to be quick to get in. And go in with small size if the breakout happens. If you feel like you're not getting a great entry. But sometimes those are the best ones to hold. So anyway, short term, the short is over for me. Right? No longer a short here. I don't like the risk reward further shorting here. It's just me. This was the higher probability play. I know some good traders getting long JP Morgan here. Interest rates are going to rise. Why wouldn't you? Breaking out. Pulled back. It's a nice, God. It's a nice looking chart. And the fundamentals sort of align. Visa, same thing. Sort of this ascending triangle, I would say. It's a little bit rising wedge-ish, but not enough angle for it to be a rising wedge. So to me, this is more falls under the category of, ascending triangle, right? Which is a bullish pattern for obvious reasons, right? Again, read technical analysis of stock trends. It's the Bible for classical charting patterns. You'll understand this measured move. You measure from here to here, and then wherever it breaks. So it's trying. Measured move. So let's do it, so you guys can learn. Here to here, lowest part to the, I guess, the top of the resistance, I guess. So plus 78. Like, what are you telling me? Plus 78? Yes, I am. Now it's not going to go straight up, and it may fail, but yeah, could happen. These things work out typically. Let's undo. So what I like to do, let's do price zone. We can just say something like this. Maybe you take Visa off your watch list and then you come back to it a year or two later and you're like, shit, I could have bought Visa here. And then you're like, and I had that there too? What? What am I thinking? But, you know, this is a much longer term chart, so looks good on the weekly too. So Johnson & Johnson. What did we look at? Inverted head and shoulders? Yep. Strong chart. They make a lot of different things. Their baby shampoo is amazing. Yeah, holding. It's a buy. It's a nice bullish chart. Anyway, the 30-minute looks good. So we're going to do something. We're going to go yellow trend line, because stops here. We're going to go like, yeah, we'll just extend it out because we don't know how long it's going to take to actually break this trend line. Yeah, let's just go in and we'll extend it on the right side. Right? This would extend on the left side, but since this is on the right side, it extends right. So anyway, it won't show because this chart doesn't show drawings past this area. Okay, so then we'll right click it and then just click on alert and enable alert for chart drawing. This is a chart drawing. When it crosses, when price crosses this, we're going to say, I'll give me alert sound number 8, and then we're going to change this to, let's see, last price crossing, and we're going to change it to tool config 3, which is green up here. See that? So it's gonna, this trend line is going to go from yellow to green, which in my mind is going to be like, hey, idiot, think about buying it. Okay. Only trigger once? No. If it comes back through the trend line, give me give me another alert. I might need food. Let's see. I did some high intensity sprinting on the treadmill today, so I'm plowing through calories here. Today a little bit more. Yeah, just a nice looking chart. On the downside, I like support at, you see this LVN here? At 156, 155, 156. So that's in this area. So we'll go ahead and put price zone green, and we'll put it like right through here. You see that? And we'll just say what it is, because you know I'm not going to remember this. LVN, and then it's also base support. Nice buy zone. Okay. So anyway, now it shows up on this chart, right? Because this chart takes the drawings from my weekly and my daily, but the daily charts, or my intraday chart, my low time frame chart, when I make a drawing, they don't show up on my weekly and daily. Why? Because this is a low time frame. I don't want to muddy it up with all of that. This is what, showing what, 1, 2, 3, 4 days? Come on. Do I really want a line here that doesn't allow me to see things very well on the daily chart? Look, would I really want a little line here? No. It's a short term chart. That's all it is. So that's why I do it like that. On Thinkorswim, that's one of the things that gets pretty muddy. But lots of reasons to use Thinkorswim. You see earnings and all kinds of news, and it's all right there. So I do like Sierra chart for charting a lot more. But if I lost it for equities or just decided not to use it, it wouldn't make me cry. Okay, next chart. Walmart. Ooh, nice little compression area here. So on the daily, it's made higher highs and higher lows, so it's in trend. So it may come down a bit, but on the 30-minute, it looks good. This thing is I like it. So we're going to do this with Walmart. Consumer discretionary is Walmart, isn't it? Or Staples. That's Staples. Yeah, let's... Doesn't always trade very much after hours. Let's see. Extend drawing. Let's see. Yeah, there it goes. Extend. That's a faster way to do that. All right. We'll just keep that in mind. But Walmart on the weekly looks good too. Right at this lower area here. Yeah, you could probably buy Walmart with the target. This is definitely resistance, 142. So, 7 points or so over the next few weeks. If it breaks this, then, target all-time highs and then top of channel. And maybe hold a little bit for some sort of rule of 3 up here or something. Economy reopening. Okay, next one. Boy, oh boy, this takes a long time when I talk. So my wife's it's already, what, 5:17 for me? Look at this. Look at MasterCard. That is some kind of chart. We're just going to leave this alone. I'm not going to talk too much about it. I have ideas about it. Disney. Again, if for the 3 of you or so watching, if there's something you want me to stop and talk about, then I'm happy to do that. Especially if I'm like, well, I'm not going to do MasterCard or whatever. I'm happy to stop. I just may not get through my list if I keep going at this pace. Or actually, I won't. I won't get through my list. Little short-term breakout here with this Disney. Let's put it back on the 30-minute. What was I thinking? That's why the chart wasn't... I didn't even realize I had it on 5-minute. Let me look back real quick here. Yeah, okay. That's fine. Talking too much, see? Definitely should have been paying more attention here. About to break out, actually. You can say rule of 3 here. It's a little sloppy of a trend line, but that's fine. Whatever. I'd not put the trend line in the after hours stuff. I'd put it in the RTH stuff. Just ignore all that after hours action. Something like that. So that's the open rejection. Yeah. Consolidating here. Yeah, it's probably going to bust some shorts up. Yeah, and then resistance is just right here at 191. So let's look here. So let's see. On the daily, it looks good too. Yeah, 190. A little volume note on the daily on 191, but whatever. This is healthy. See that? Pull back, holds it, goes a little lower. You'd expect just trend up with Disney. Target, 220 or something. Here's the weekly. Nice chart. But doing this, if you like to trade futures, this is going to help you, because as you get familiar with these charts, you're gonna have in the back of your mind, like, okay, wait a second, I know where these stocks that make up the indexes, what they look like, right? And while everybody else is maybe looking at a technical pattern, and kind of unsure and saying like, well, I think I lean bearish on the indexes because it's just a little overdone or something like that. And it's a bit of a fuzzy hypothesis. If you do this, you're thinking, well, shoot, I know what these charts actually look like. And on these, I just go by, I have my indexes with my FANG M, or my MAGA stocks, Microsoft, Apple, Google, Amazon. And then I have my large caps, right? And I have these organized by the largest cap stocks. So I know that these are going to hold the highest weight for the indexes, right? And so that's how I do it. And there's a lot of, some are in the NASDAQ, some are in the S&P 500. So a lot of these here at the beginning are all in both. So right, this is how I work it. So I have a very good idea of what is making the NASDAQ, or what's making the E-mini bullish or not. When a lot of folks are just using the technicals on the E-mini, and that's fine if you make money and you're consistent at it, but I find that I'm right a lot more of the time when I'm doing this. So, and you'll get a feel for it. You'll realize that, like, the nature of what stocks are doing right now, Bank of America is breaking out. It doesn't matter how you look at it, right? And Bank of America, yeah, it's a bank, but JP Morgan, Bank of America, Goldman Sachs, these are, they hold a lot of weight. So if some of these bigger banks are breaking out, Visa's, high market cap, MasterCard, high market cap, huge market cap. So if these things are breaking out, these, and tech is kind of going sideways, the E-mini can move a lot still to the upside. And once tech digests its gains and it starts to move, it can move a hell of a lot more. So then you couple that with, okay, the Fed is dovish. Ignore all of the doomsday folks, at least for short terms. Like by week to week, you can have a much better idea of where the market's moving. So oh, Yashis, yeah. So, and JB, yeah, you're welcome, man. I'm glad that you're enjoying this. Is it possible? Okay, now I'm looking at Twitter. I was just gonna link something. From Twitter here. Hold on. Copy link. Okay, here you go. So Simon on Twitter asked me a really, he asked me questions, which you can click on the picture and sort of read my responses, and that may answer a lot of the questions about high volume close Yashas. So I don't know if you saw that post, but that gives a lot. Let's see. Yash Trade 3, maybe your Yashas, I don't know. But that tells you quite a bit about my thought process. That's not all inclusive. There's so many iterations, but I'm definitely not talking about it and then just bullshitting my way through bullshitting my way through it. Again, there's just so many iterations, so it's very difficult for me to talk about all those iterations. It would just take hours, and I don't know that I have the capacity to just remember all of them as I go. So I would have to bring up my handy dandy Word document and then talk about it from there, and it's just too much, man, and I wouldn't enjoy it that much. If you guys want to learn about it, you just keep asking me questions, and we'll cover it over time, and then I'll enjoy myself, and you guys will get it out of me eventually. But just I'm gonna try to focus a little bit more here on these stocks for now. Anyway, let's look at the Bank of America here again. Even on a lower time frame, breaking out, right? Sort of this cup and handle kind of pattern. So let's see. This is where you want to see if it holds, if it comes back in and keeps going. This would be rule of 3. So if it comes back up here and then pops down, it might get stops, retest this area. So it'll get stops from longs, stopping out on this trend line, rule of 3, right? That I'll buy here, expecting it to bounce perfectly on the trend line and go. But we know they like to hunt for liquidity here, right? You've been around me long enough, hopefully. And then they like to, and then it would be support off this trend line. So that's my thought with Bank of America. Proctor and Gamble. This is a little, I did some explaining on this stock, so this is from the last YouTube. So it broke out, didn't it? Looks nice. Let's get rid of that. It's a little dirty. In the channel now to the upside. Proctor's a buy here. If anything, it will bounce on this 10 probably on the daily. Look, that yellow is the 10 SMA, right? I have it all up here at the top. And you got confluence, you got the you do have some rolling over, but I like this because it's what Adam Grimes calls a complex consolidation, or a two-legged consolidation. After, mind you, this double head and shoulders, right? It's a double head and then a left and right shoulder, and it hit the full target to the downside. But pattern within a pattern, it's a complex consolidation, clearly breaking the downtrend line. So on the daily, this is one of those economy is opening stocks, so it's held and now it's pushing up through. So it's probably worth a buy. You do have some overhead here, so it may kind of come down to the 126s, right? If it breaks the 120s, you would want to be out, right? So it's clean because you got volume here, right? And so if it breaks, you're going to get supply, and you do want to be out of that, right? So you have a volume node here at 125. Maybe you put your stop above the low, like 123, 120, 122, 123, 124, something like that. Because if it breaks the low, oftentimes intraday your stop's going to get a lot of slippage. So I'd rather stop below, or above the low, I should say, and then not have issues with liquidity. And then if it bounces again, get back in. And that's where you have to just have nerves of steel, and not be psychologically affected from losing. Just get right back in. If you think, okay, well, it looks like it got a lot of stops and it breaks back up, you'll end up buying higher again and putting your stop in the same place. But depending on how it gets there and how much volume is stopped out here, well, they flush the longs then. So yeah, this is short term. It's a nice buy area, right? And you could actually, right? So here's the channel. So this is a nice buy area, but let's add another trend line on this, And we could say rule of 3, right? So maybe you buy in this area, right? You get volume here. If these are strong hands, but they want to find a better entry, they want it averaging down, right? Big money. They don't care if it goes a little bit lower. Look at this. This is a low volume node. So if they just get a bunch of stops here, they're happy to buy. It goes up. So anyway, hence the reason your stop should be below. Maybe even right in here, 127 or something like that. Yeah, it's probably a little bit better spot for a stop. Just looking at the short-term price action. You could see this big volume here. See that? Big delta volume, right? Big seller. Absorbed. So someone didn't like it. Someone did. And they bought the hell out of this huge cum delta to the downside. And then subsequently, we're up 10 points from that area. So Proctor looks pretty good. Home Depot on the bottom of the channel here. Yeah, it's just grinding up. It's just grinding up. We'll adjust this channel a bit. Where are you? There you go. Let's see on the golly, what a parabolic move on the daily. Yeah, this thing's not behaving. What I'm looking at here is I'm trying to figure out a little bit. I am trying to figure out if this thing short term on the 30-minute, because we know on the daily this is what it looks like. Foom, straight up, okay? I'm trying to see short term if this thing is possibly moving, losing steam a little bit. You can see it by some of the red bars here on the daily. I'm seeing if it's losing steam, if we might go into a bit of a chop zone here, if that's likely. But this kind of move where you break down out of balance and then rip back through balance typically leads to balance being expanded 100%. So, right here would be the ultimate probably take profit and scalp short zone, right? Maybe buy some vertical puts or something, right? That way you don't get as much theta loss, and maybe go a month or two out, something like that. And then go like, I don't know, 10 points wide or something like that on the verticals. Shouldn't be too expensive. And then that way the puts you sell are kind of, they're losing value with theta, so they're offsetting the puts you buy. It's a nice way to do it. Still make some money. You just have something working, right? So gets to this point, I believe I have an alert, and then get the alert, and then hey, go think about buying some put verticals here. It's not a bad idea. And think about where we are in the economy. If the economy's rip roaring and the Fed is like, yeah, we're not saying we're not raising interest rates, then you start thinking about, okay, big money's going to pivot pretty soon. Right? That's how it works. So, not much for me to do on this. Not everything has a lot of NVIDIA in balance. But short term, 30-minute broke out. So I missed it. I missed NVIDIA. Can't catch it all. My kid is going to be going to preschool pretty soon, which means I'm going to have a much better schedule for trading. So right now when my wife works, I'll watch him, or it's usually like one day a week or something I'm watching him, or two. But I tend to be a night owl, so if I mess up my sleep schedule, I'm screwed. So I have a difficult time getting back on schedule. But if I'm on schedule and I'm super consistent. So anyway, I won't miss a lot of these plays. I won't be posting them on Twitter or anything, but just a personal note. That's why I missed it. Very nice, though. So chip shortages, it's undoubtedly going to be affecting their business a little bit. It's more of a supply issue. The demand is still high. Bitcoin, all these things, Ethereum, all these shitcoins are still rip-roaring. So a little bubblicious, but this breakdown and push back up, and we break out of 594, probably gonna look at 600 or 700. As crazy as that sounds, that's just the way the markets move. That's the TA. All right, well, moving on. Missed that breakout. Let's see, PayPal. Yep, another one broke out. Right. Maybe that trend line's sloppy. I think it is very sloppy. The kid. Yeah, he fell asleep in the car. We just got back from grocery shopping and a bunch of other things. I'm happy to hear him up. This cute sounds. Just everything's playing and whatever. Okay, so next thing here. You know, the daily on PayPal is concerning, right? Because you get this big move that retraces, and it's head and shoulder-ish. So, and again, don't be memeish about head and shoulders. Like, oh, head and shoulders totally overdone, and everybody uses it, and you know, a lot of people use it wrong, etc. The idea is just, again, it's just that you're in trend, and then all of a sudden, instead of pulling back to here and continuing thump in trend, you're now coming back and you're neutral now. You're not in an uptrend. So this is not, maybe on a higher time frame it's in an uptrend, but no, on a daily it's definitely rolling over. All the moving averages are converging. They're not all equally spaced again, right? The 20's coming down under the 50, the 100's coming up to the 10, to the 20. It's okay. So using moving averages, you know, and then just using basic trend theory of higher highs and higher lows. Now we're having neutral low. So now, you know, it's coming up here. And so relative to this area, it's making a lower high. So, you know, you can anticipate maybe PayPal goes and gets some stops up here or something. That's because so many people love head and shoulders. They love to come get stops, but it's still making a lower high relative to the high. So, you know, I love coming in and taking a shot at the short side here. Right? I get a great entry. My stop, if it goes up here somewhere, if it goes this high, well, it's probably going to range out or it's going to make new highs. So I can put a stop here. I can put a TP1 back at the neckline, right? So I stop somewhere here. You can already see if you get an entry here, it's already better than 1-to-1, right? And then if okay, let's say you take off half your position here, right? And you move your stop up here to break on the remaining position. You may move your stop to break even. If this thing tanks, the measured move is 172 or something, right? And you can just hold it. And, you know, maybe move your stop down here, right, when it breaks to here. Something like that, right? Put some sort of GTC forever good till canceled OCO with the stop, you know, here, and then a, you know, profit takers. Maybe you look at POC, right? Or maybe you look here. You know, you take off half your position here. Right? It's a potential bounce zone. Right? Or if it starts to break down and it rejects really hard off the LVN and it shoots back up, you just take it off. But again, your entry was here. So that's what I'm looking at. I say head and shoulders, but what I really mean is the trend is no longer up with PayPal. That's all I'm trying to say. Don't get memeish about chart patterns, especially if you don't understand what, you know. I could tell you, because I've read the book. I know what the volume's supposed to look like. Okay. On a head and shoulders, it's supposed to be high volume. Oh, sorry. High volume here as it comes up. High volume here, right? And then here, the volume should be diminishing, right? And then here, coming back down, the sell volume should be picking up drastically. The buy volume should be low right here, very low. As it comes around, the sell volume should be increasing here. And as it breaks the trend line, it should be drastically increasing. And there's reasons for that. So read that book, Technical Analysis of Stock Trends. They'll explain exactly why the volume's supposed to look like that. And they'll explain to you how institutions are buying and selling and how you get a tip off. So if your volume, I say volume profile, but what I really mean is if your volume down here, not your volume profile here, but if the profile of the volume here looks the way I described, you get a much better idea. So look. Sorry, down here, but in the wrong area. Right. High volume still. Big volume close. Low, big volume sell. Big volume sell. Big volume sell. Right. We got to zoom in more, but it's why you should be reading those books, because you'll get an idea of what volume's actually supposed to look like and how it's supposed to behave. I know these things and I don't talk about them because it would take me forever to get through a chart pattern, because there's paragraphs in the book about it, but it will give you such an incredible it'll give you like an incredible edge over other people in the market who don't read that stuff. So I can tell I need food. So I'm just gonna, I do want to get through my charting, and I've been talking like so much. So I'm just gonna go a little bit faster and talk less. Intel, I don't like trading Intel. I have it up here. Okay, I know what it's doing. Moving on. Gorge, beautiful. I said in the last video it's a buy. Did I catch it? Nope. On the weekly, looking at a parabolic advance. Now we're doing this. So parabolic advance. Once that breaks, get short. Anywho, get rid of this junk. Here, let's erase on the weekly. I know where I want to buy on this thing if it comes back. Comcast, hate this thing because it's my internet provider. Whatever. Still nothing yet. Uptrend that is working on getting stronger. Nice rot here. Holding. Very nice rod. resistance still up here. Support down here. Did it bounce on support? When did I talk about it? Yes, it did. Anyway, just don't have enough time in the day to play all this stuff. But is it going to help my futures trading? Nod your head. Yes, it is. And it keeps me sharp. Inverted head and shoulder on Verizon. This is a very popular cell phone company in the United States. Very, very, very good cell service. I happen to know that they are trying very hard to improve their customer base. They're making a big push. Don't ask me how I know. I just know. It's not insider trading. But I do know. So this pattern, inverted head and shoulders, makes a lot of sense to me. Short term, broke on the daily what was just a nice parabolic move, but it's now still holding 10 SMA. So yeah, this needs to be adjusted a bit. Let's see. Get back on my cursor here. Yeah. Very healthy pullback in light of this. So I would expect this to be the new support in this channel, right? Pullback on support, right? Volume node, low volume node. So pushed out of that. So making higher lows relative to the inverted left shoulder. So here's the head, here's the left side. Very nice chart actually. But it's choppy. Not a super fun one to trade for momentum traders. Hey, remember that? I said resistance here. Hey, that was before this happened. See that? TA works. I'm just telling you. Coca-Cola selling off. This oval was here before this happened. So just letting you guys know it does work. Nice confluence here on Coca-Cola. Netflix. Imbalance, choppy. Not much to do on it. Just accumulative. So it's accumulative or it's distributive. So this is either accumulation or distribution. Don't know. Just wait. All right, Adobe. Healthy. Flagging out on the weekly and the daily. Solid company. Looks good. Starting to get stronger. Little, what is it on the daily? A little gap here. Yeah, gap. So closed here, opened here. So a bit of a gap. The E-mini was the tide. It's raising all ships here a little bit. Especially something as choppy as this. Okay. Cisco Systems. Let's take a look. God, I hate this chart. I just don't like it. It's not fun. But in a nice little channel. I think interesting how this became resistance here. That's real interesting. Let's see. Short term. Not much to do on this. Chop City. Chop City. You see how this is kind of head and shoulder-ish, right? Head. Kind of a neutral low. Doesn't make all the way down, but it doesn't make a new high. And then, thump. Measured move. Hits it. So, finds support on the previous low. So, a lot of long-term folks got chopped on this. This is a weekly chart down here. So, Broadcom. I like this chart. Right in this channel. I like that it was a megaphone or symmetrical broadening formation. It's the official way to say it. It's the right way to say it. Anyway, I like that it was in this megaphone and that it broke out and it's just trudging along. Just doing its thing. Look at the volume. All at the lows. See that? That's how you sustain trend. There was a ACY today. You know, the volume profile was like inverted, right? It was like here. The volume profile today looked like this, something like this, and then like this, and then the POC was here, right? But the price had done, you know, something like this or whatever. And then it's flagging out and everyone's like, bullish. Oh my gosh, bullish. No, the POC's at the top. And it's a pump and dump. Oh my gosh. People got hurt on that stock today. Tried to save some folks. As a rule on pump and dumps, here, I'll show you. I'll show you the chart. I'll show you the 5-minute to give you an idea. See the POC? That's what I was talking about, right? Like this, like this, like this. It's up here. As a rule, and this is what everybody was looking at intraday. They're like, oh my God, what a beautiful flag, right? POC's up here. This has all the supply here. So you think it's really going to go? This is a pump and dump. This is, you know, they're, I think, filing for Chapter 11 bankruptcy. So sometimes it works out, but most of the time, these guys are doing something nasty to people. Right? Hiring some group of traders to essentially, how do we best get out of this stock at the highest possible price? Look at this thing. The float is 1.1 million shares. And in other words, there's 1.1 million shares to trade. This thing traded what? Its float times 200? Look at the deltas. They're just selling. They're hitting bids just to dump on you. Anyway, this kind of thing, it's like I hate seeing that. When I was first starting out trading, I would buy like this, you know, VWAP or something or above it, looking for a big move or something. Like, oh, if it came down here, I'd just start, oh man, I'm gonna buy like 50% retracement. I got smoked so much of the time. I didn't realize it's context. Like, what is driving this? What's going to keep the price up? What does the volume profile look like? But anyway, I have a rule. I'll buy for a pop. I will buy first pullbacks into LVNs or HVNs for a small pop. So here today I bought the 20, sold the 10. So just FYI. That's my rule. Every other subsequent bounce as the volume diminishes, I don't touch it. So, and I'm very, very disciplined when it comes to this. So, because otherwise you get stuck buying a breakout, and then you're, you know, this was at this time. This stock here was, you know, it was halted to the downside. So you know you're not going to really get out. There's not. There is liquidity, but it's tough to get out. If you're trying to get out, you know, with the limit order, you know, you just have to hit the bid. You just got to stop. So you can look at the daily on it. You can look at the weekly. It's clearly a pump and dump with the, anyway, airline parts company that is gotten really hit hard by COVID, and they're going to be out of business. So they didn't make it. So this is their attempt to get out today. Maybe break even for a lot of these guys. So anyway, it was on my movers watch list today. So where was I? Comcast, ExxonMobil. All right. Tyler asks, so NQ Scalper says, yeah, you're right. Yeah. Yeah, but it's just the volume profile. Look at supply. Even if the thing breaks higher, just avoid shit like that. Why? Because it's not a good volume profile. If the profile had all the volume at the lows and then it flags out at the highs, well, yeah, you know, those who bought the lows and sold the highs and then are trying to buy back higher have fuel. But if if all the volume's up at the top, most likely it's all just supply, unless there's a fundamental reason to be owning the stock, in which case they might just be buying up there because they want it that bad. But there's no fundamental reason, so stay the fuck out. Just have these little rules and understand just based on the context. It's just not worth it. So you're saying, can we get back to the 4K ES before further continuation? Yeah, we could do that. I don't know. But I'm not doing ES right now. I have no idea what's going on with the ES. None at all. It's a different... I've got another instance of Sierra chart open with the ES, but I'm not focusing on it. This is just equities charting, my friend. Yeah, Verizon's strong. Okay. Coca-Cola. Wait, I'm way too far back. Maybe go. Texas Instruments, is that the next one? Let's see, Broadcom. Okay, yeah, Texas Instruments. Need food. This is another strong chart. So I thought it was going to kind of come back, but now it looks like we're trying to break out a channel. Probably a good short here. Above into 200. So I buy some put verticals for a few week expiration or something. But this is one of those, they provide a lot of stuff for schools. So if their sales start popping because all the schools in the US start opening, it's where the fundamentals do matter. Yeah, it might get some sort of blow off move. So I'll keep that in mind. Be very, very careful with entry here. Like more so than normal because of that. Yep, definitely. But let's do this. Let's put a little bit of, let's put a line there, and let's put an alert. And let's enable this when the last crosses. Give me a alert number 8. And let's say red. Let's go yellow. Stops will probably be getting hit there above 200. So above 199 it gets frisky, and then above 200 are probably stops. It's just a round figure. You know, if you break the round figure and then it keeps going, it usually goes into the single digits, doesn't get to the next 10, but it'll keep going, and those are just stops. And then profit taking comes like a motherfucker. So, you know, if I got a short entry at 208, 209, I'd hold it with the stop at 211 or something like that, and then I'd be looking for under 200, maybe 195, 196 to cover. And that would probably take 2 or 3 days at most. Again, I sound so self-assured, but I'm not cocky. I've seen this enough times. So I'm just trying to anticipate what may happen. And if it happens, you know, since I have a plan and I have an exit strategy, you know, just pull the trigger. But don't copy trade me, because you'll have no fucking idea how it's supposed to act, and I'm not going to be holding your hand. So the point of this is for you guys to ask questions, and well, I'm bored, so I'm just on YouTube keeping myself semi-sharp by talking about this stuff. That's part of, you know, a little bit of selfishness there, and I'm just being honest, not trying to be a dick about it. Okay, so that's my idea there with Texas Instruments. Costco. Getting close to my short-term completion here. Maybe I'll go over the ES a little bit. Let's see. Costco breaking out. Oh, what an interesting spot. Into resistance here at 358, 359. You can see it too. Just see it. Look at that. 357. Just didn't even get to 358. Oh, so interesting. Few points. You could make some points on these stocks. Look at that. Look at that. But short term, making a an ascending triangle. It's ascending against this base. Right? We went over that earlier. Right? It's this kind of move, and it's doing this. So as long as it keeps doing this, you know, pre-market might get some chop. But as long as it holds this low here, see that volume there? As long as we hold this low here and then come back up against this area, we got 1, 2, 3 times. So price is, a lot of people are like triple top or triple bottom. To me, if price moves back a 3rd time to an area, there's value there already. And if it keeps making higher lows, right, then, you know, people are willing to buy higher and higher each time it pulls back. So whoever's selling here, once that supply runs out, and if there are people who are shorting, they lose that battle, thump, we get a big move. So, maybe not the best short here on Costco, but, you know, I just identified this as a high volume node and likely resistance. So, you know, it is causing some chop here, 357 to 349. So the initial hit there caused a stronger reaction. Subsequent hit less strong. So we might be getting rid of supply. That's what that tells me. Hope that's useful. I think it is. It's useful to me. Okay, moving on. Qualcomm. I knew an engineer at Qualcomm when I lived in San Diego who was part of their development team. If I would have traded on what he told me, it would have been insider information. I never bought the stock. Because I don't trade on hot tips. I just don't. But he had some hot tips. He was telling me what they were working on for Apple and what he was specifically working on. So, gotta be careful with that shit. So, I don't really touch Qualcomm too much. He knew I was a trader. Yeah. Anyway, he told me about it when it was in the 80s. Shoulda, coulda, woulda. Oh, let's see. Jim, I have YouTube. That's it. I'm not offering anything for sale, nor do I plan to. So this is for my own entertainment, and then you know, maybe there's a place. I've got a Telegram. If you look at my YouTube sort of main channel, top right on the banner, there's a Telegram invite up there. So all that is there for is if you want to share charts with me or with each other, you can do that. No signals given. I don't monitor it when I'm trading during the day, but when I get on YouTube, I do monitor it, although I'm not today. And I see someone posted, sorry Reno. Thank you for sharing very much, man. That was way early today, so yeah, it was. So Reno's sharing on Telegram, probably not expecting a response back from me, but maybe somebody else would have chatted with him. Anyway, the purpose of that for me is so that you guys can share charts with me easily. You can just you know, if you're in a chart or you want to, like from Sierra chart, if I right click, I hit copy chart, or if I do it from the menu, I can just paste this right into Telegram. So if you have like a screenshot, you can do the same thing, you know, just screenshot, control V, you know, you edit it, whatever, make it look nice. And you can paste it right into Telegram, and then that way it's kind of a two-way dialogue. But yeah, my YouTube, I'm here most of the time just to live stream and when I'm not trading, so that I can keep myself sharp. Hopefully, talking about the things that I've learned over the years. Because if you don't use it, you lose it. And talking out loud for me to helps me to justify what I'm doing in a different way than how I think about it internally. Unfortunately, it's a shitty human trait I have. I think some people are stronger in that regard. Yeah, this is an interesting chart. On the 200 here, broke upwards out of balance. Into this LVN. So let's see how it acts. If Qualcomm breaks 146, I think I want to be long. So let's do that. We'll say 147, and then we'll if moves through volume node with strength, long it. All right, that's for my own notes. It tells me how I want to be thinking about that if I see it again. So crossing, last, alert number 8, tool configuration. Yeah, just green. All right. But it's got resistance above. And again, on a 30-minute chart, you don't even see the volume profile because I have this volume profile set to show everything, any visible bars. So it's good to have a daily up here, right? You see that LVN. See, like, look. It's still an LVN no matter how you look at it. Right there. See that? And it's this, all of these longs that are going to basically, that's part of why it's a low volume node, but it's also where there is volume from longs that, if you're still holding Qualcomm and you're adding down here, right? If you took the breakout on Qualcomm at all-time highs and you bought more here, and you bought some in this consolidation, what's your average here? So when it comes down here and you buy down here, maybe you're a Qualcomm bull and you're like, I just need to buy on the 200. So you're buying. What's your average? I don't know. Somewhere in here. What do people like to do? Hold losers and get out at break even. So, if it rips through this like nobody's business, then institutions are probably buying. That's my idea. If it rejects here before it gets there, then the institutions are already out of this stock. See, look at that. You see that? You see that selling volume there? Don't even need to know if it was earnings. All we know is that there's massive selling volume at all-time highs. And then a gap down. So it's probably earnings, but whatever. Oh, one more. Amgen. Interesting stock. 30-minute looks interesting. We'll just say it looks interesting. This isn't 30 minutes. Dang it, it's 5 minute. Idiot. Sorry, NQ Scalper. I'm not sure what you're referring to. I'm just talking. Totally in the zone here looking at my charts, so the more I look back and forth, I got 3 screens, only 3 screens, 3 curved monitors here, and the chat is on the very far right monitor towards the back. So let's see. Amgen is too choppy for me, but it's in a solid uptrend. I mean, I just don't like it. Look at this volume here. Look at that. Oh, Qualcomm. Okay. Yeah, most of the time if I'm trading the E-mini or like on a sim trading the E-mini, then I'm I'm looking at the chat because it's just funner for me. But right now I'm just in the zone here, trying to get through this, and then it's already 6 o'clock, so I want to eat dinner pretty soon and go run around with my kid and hang with my wife. So, but anyway, a few more symbols here, and then I'll go over the E-mini a little bit. I'm curious to know what it's doing in the after hours. I hope it's cooling off. Well, actually, I don't give a shit if it's cooling off. If it's just ripping, it's just more opportunities. Opportunities either way. I don't give a fuck what it's doing. Okay. Yeah, Beyond Meat is a sleeper. I'm telling you, it's a sleeper. Ah, come on. Work how you're supposed to work, Sierra. Sometimes when I click too fast, when I right click on a chart, it's supposed to go back to this cross chart values tool. Sometimes if I click too fast, it doesn't work. Probably a setting for that. Trying to figure out this chart here a little bit. What I'm looking for here is the volume here, and then the volume profile mainly, and then the chart pattern. So what I'm looking for is an accumulative chart pattern. You often get a descending triangle in accumulative chart patterns. So what you sometimes get, like on the daily, is it comes in like this, which it's like a bearish chart pattern. But if every time it makes a new low, it's bought on massive volume, it's typically a sign of accumulation. They're using this chart, but they're allowing this chart pattern to develop to induce shorts. So if it breaks below and then comes back, so the bodies all stay here, that's usually accumulative. Just my experience. So that's what I'm looking at here on BYND. I think it's a sleeper. I'm thinking about summertime. I'm thinking about all the products that they can come out with during the summer, barbecues and all that stuff. And the whole vegan movement is still strong. So yeah, I could just see this thing. I could just see this thing blowing up and making new all-time highs. I can. I think it's a sleeper, so I've got it on my watch list. Discovery A. All right. I've been waiting on this one. I'm watching it. I bought in here. I day traded it and I got out at, I called it all on Twitter ahead of time. When it was at 39, I said it's a buy. Get out into 43, 44. So anyway, it was a good winner for me. But now I'm just waiting. I want to see. This is so wrecked. There's so much supply here, right? This is the Huang blowing up. It's that large hedge fund that was financed by Goldman Sachs, JPM, Credit Suisse, all these companies. Oh, cool. You're in Oregon, Mir Lavani Riviere. I grew up in Oregon. Beautiful. I kind of miss it. Actually, I do miss it. Clean air. Sorry, I'm catching up on comments here, so I'm not talking. BNGO, sure, I'll add it. I'll put it at the end of my list. I've only got 8 more left to do here, so give me a sec. BNGO, just adding it to the list. All right, is that bingo? I don't know. I have no idea what BNGO is. It's okay. I'll figure out when I get there. Disca. Let me look at some of the. Oh, 848 4F. Thanks, man. Appreciate the nice comment. I have an Oregon vibe. Yeah, I've been in California for longer than I was in Oregon, but I still feel like an Oregonian at heart. So my wife is a California girl, so she struggles with rain and clouds and all of that. So I don't know. If we moved to Oregon, we'd have to buy a house with all kinds of daylight bulbs in the house and keep them on all the time. Our energy bill would be extravagant. She needs the sunshine. She needs the bright light, or she starts to feel depressed. One of those things. Oh, that's interesting. Anyway, I do look at that volume here. Diminishing volume. Iggy, if you're here, it's looking hopeful for a pop with Discovery, because as we decrease in volume here, we're holding, not making lower lows. Just looking at it here. I think it's likely to pop. But it's not an A++ setup, right? Meaning it's not making some sort of chart pattern that suggests that we're going to fly higher. So I would be curious on Discovery what the short interest is. If it's significantly higher, I think we'll pop, but if there's not a lot of short interest, I just wouldn't touch this right now. So that's my thought. Let me go look here. I'll go look at the short interest. It's here somewhere. Sorry, I can't see comments right now. I'm just in browsers looking up my information here for short interest. There you go. Enter symbol. One time I used to pay for short squeeze. It's shortsqueeze.com, but I don't anymore. So, disk. It's a little short interest ratio, percent of float, 30%. Increase, 2%. Short interest. I think it's going to pop. I don't know how old this is. There's a fellow on Twitter I used to follow. Igor something. And he has access to current short, as current as you're going to find for short interest. Igor something. And if you ask him, he will tell you what the short interest is on some of these things. So let me see if I can find him. I'll put a link to his Twitter handle. I should probably follow him again. He was awesome. But I just reduced him. Igor and short interest. He used to be on Twitter, last year sometime. Igor Dusanowiski. iHorse3. I'll give you his Twitter handle right here. He's the nicest guy on Twitter, hands down. If you say someone else is nicer, you're lying. And he will oftentimes tell you what the short interest is, almost all the time, if you ask him nicely. So here it is. I did get the Underdesk treadmill. It's amazing. It is incredible. I've been using it so much that my back's a little sore. So I'm not using it now, and it feels good. We have another treadmill, so I was doing sprints on that today. So that's his Twitter handle, iHorse3. He has a business. He's this guy's no joke. He has humongous institutional clients. So this is not some scrub. This guy is. I have looked into buying his service because incredible stuff on Bloomberg and all kinds of stuff. So just letting you know, he's awesome. Sorry, not charting for a sec here because I'm doing some stuff on Twitter. Okay, see, look, I'm distracted now. I got to follow through. Okay, now back to the charts. So Discovery's probably gonna. The short interest has gone up. So Iggy, if you're there, goodbye, my friend. I think you're on Discovery K, right? Non-votable, non-voting shares. So I think this is what he has bought. Same deal. Same exact deal. Let's go look at it real quick. This is for Iggy. Legacy. Just going through my extensive bookmarks here. Jeez. All right. It does make a difference on these. Which one you're in long. Yeah. So the short percent afloat on Disc K is quite a bit lower. Again, I don't know how current that is, but something you want to maybe consider. I would buy Disc A if you're going to go long on that. Even though there's a little bit of a difference on price, you know, at $7 a share, I'd buy Disc A, but you know, whatever. Iggy, I know you're competent, so you and your pops. Let's see. Good people. DraftKings. I can hear my wife running on the treadmill right now, by the way. Let's see. If it breaks this trend line, I'd go short. GameStop. You guys already can see what I think of GameStop. Left chart daily. Look, you guys know what Tulip Mania was? If you're new to trading, you probably don't know. Anyway, that's my chart for GameStop. Moving on. I know there's so many people that own GameStop, and I hope it works out for you. I do. This is a bullish stock. Huge gap today. I said overhead supply may take time to work through. We gapped through it. This is probably a fucking long. Alright, this goes on to the watch it bright and early Monday. Excuse my French. I know some of you don't like that, but I curse like a drunken sailor. I know. So, Peloton. High. Higher high. Now this. Remember I was talking about what a Head and Shoulders is supposed to look like. You see this volume down here? Institutional. Selling. Institutional. You see this? Volume, volume, volume. sideways. The volume picks up to the downside. Well, no, that was a green candle. It doesn't match the prototypically perfect Head and Shoulders on this right side. So anyway, again, read the book, Technical Analysis of Stock Trends. This will all make a lot more sense to you. I'm not going to explain how it's all supposed to look. It's one pattern amongst many in the book, but it's a phenomenal book. You'll be able to understand this pattern a lot better in light of this. Anyway, nothing to do here. If it hits this area and rolls over, then short. But if it comes a little higher, see, I like this for stops to get hit and then enter short here, if I can get it with the stop up here. So I like this risk. 143, 144 for 160. So $14 of risk for downside of potentially 40, 50 bucks. Technical analysis of stock trends, yeah. Yeah, Charles. It's right now it's called so this would be your left shoulder, and then this right shoulder would be called a truncated right shoulder if it didn't make as high of a high as this left shoulder, right? So this would be called truncated, but you say limp shoulder. So yeah, I like that too. That's yours is more comical. So I'm using the technical term truncated. Anyway, what is up, Charles? Sorry, I'm reading back through the. I only curse when I'm trading, says NQ Scalper. Oh man, my 3-year-old. We've taught him not to repeat any of the things he's not supposed to say. But for a while there, when he was like 2.5, we have no problem with him, like from a moral perspective, cursing. Okay, maybe that says something about me. Whatever, judge me, that's fine. Okay, I just think it's funny. And so I taught him to say damn it when he would get pissed off, and it was just a cute. He doesn't speak very clearly, my 3-year-old. He's like, but he would say that clear as a whistle. Damn it! Damn it! And then we were like, okay, right? His grandma is super, super religious, like just over the top. She would lose her mind. So we're like, say bummer instead of damn it, okay? Because people will get offended with you if you say damn it, okay? So now, sometimes I'm like, damn it, I'm like trading or something. He'll run in and say, Daddy, say bummer. Say bummer, not damn it, okay, Daddy? Like, okay. It's pretty stinking cute. I love this age. He's a little old, just over 3. And he's a sweetheart. Anyway, don't get me talking about my kid. So Peloton, pretty weak, but short term. Yeah, kind of struggling with the range, isn't it? Yeah, struggling. You would want it to break the range and then hold this area, then pop. Yeah. Technical analysis of stock trends. I have the 10th edition, but I think there's an 11th edition, maybe even a 12th. But the fact that there are so many editions, and it's from the original edition, 1929. So it's been around forever, man. Peter Brandt, legendary futures trader, when he first bought this book, he read it until I think he said he read it all night, and he's read it probably 20 times. So yeah, it is the Bible of classical charting patterns. I just don't even know how else to say it. Edwards and Meiji. I mean, these guys are legends. But yeah, if you haven't read this book, I just don't even know what to tell you. If you call yourself a technical analyst and you look at chart patterns, I'm sorry, the Googling chart patterns just doesn't do your brain justice. Doesn't do trading justice if you're not if you haven't read this book. There's just things in here you're not gonna find anywhere else, and the explanations are they're wonderful. They're just incredible. So Another one is Art and Science of Technical Analysis by Adam Grimes. Highly, highly, highly recommend that. He also has a free course. Take that course. I do think his course is probably worth $15,000, but it's free and it's in depth and it will teach you things that you do not know. But it's because it's free, a lot of people won't look at it, but look at it. Please do yourself a favor. The Art and Science of Technical Analysis, Adam Grimes. And check out his website as well. Yeah, Adam Grimes. Yeah, you just Google his name and his like a book or something. Buy it, read it. You will become a better trader because of it. Adam Grimes is legendary. So if any of you guys follow Adam Mancini for futures, I know he's very popular on Twitter. Adam Mancini learned most of his shit from Adam Grimes. So, you know, you want to know as much as and you know, if you're a studious type and you know you read that book, you and Adam Mancini, well then you'll understand him a little bit more. So yeah, Mancini is pretty good. I have no, you know, he sells a service, so you know he's a little bit I don't know. There's stuff that goes along with that and how he posts things and plausible deniability after the fact, etc. You know, levels are sometimes a little wide, but by and large a good trader, fairly humble guy. I did try to help him today. He didn't say thank you, but whatever. He didn't know with interactive brokers he could be using a continuous symbols, a continuous futures symbol, and that he could chart continuous on interactive brokers. He said to somebody, I use interactive brokers and the symbol only works for that contract. And I said, oh no, here's how you do it. He didn't say thank you. He may have taken that as, you're trying to correct me. Whatever. If your head is too big and you know you don't take it as, hey, someone knows something you don't and can't just say thank you, then oh, whatever. I'm not going to make that assumption about him. I don't know him. He seems like a pretty good guy, but he didn't say thank you. Whatever. If someone corrects me, I'm probably just going to be like, yeah, thanks for the information. But again, I'm not selling a service, so I don't have an image to uphold. That is the truth of the matter. Anyway, Peloton kind of weak, right? Short term might go higher. We'll see. Resistance up at 127-ish. 132 in that area. What is that? Mirlavani Riviere. And trading. Market structure price. Yeah, I don't know. I just go by V? Oh, okay. Man, I like paying for books, especially when people put all that work into it. I'd rather pay for a book than get the free version, but that's just me. I know not everybody has the money for that, so I understand. But from a principled perspective, I do like to pay for things that when especially, yeah, I don't know. I'm not going to go off on it. Okay, let's look at TSM. I like to look at this stock, Taiwan Semiconductor. No, I have not seen King Kong versus Godzilla. Oh, that's cool. Gapping up into resistance. This is such a strong stock, though. Let's look at it. And it's, you know, it on the weekly, you know, this is a scalp short, and that's all it is. That's all it is. Ah, I should have bought this thing. On Thinkorswim, I got an alert when it hit 108. Man, son of a gun. You know, I don't like this pattern here where the stock pulls back, makes a new high barely, like this. Makes a new high, and then pulls back, and then makes a lower low. I don't like that. That's just not an A+ setup for me to go long. You know, if it's going to consolidate, I would like it to pull back, make a lower high, and then make a lower low into support. Then I'll buy it. But this kind of move, essentially what it does is when you get a breakout, it traps longs. Okay? And what do we know about longs? A lot of them will hold on to a stock. So what ends up happening is, you know, you get a pullback, you do get stops, you get people chased out of the stock, right? Maybe it makes a new low like it's doing here, a little failed breakdown into support. And then when it comes back up, once we get back to this area, it's just resistance. So this volume node here just becomes resistance all the way through. Yeah. So, I don't know. These often turn into something like this. Okay. The classic megaphone. So I'll keep it in mind. If it comes up here, I would be shorting above easily, looking for a move back into, you know, whatever was the prior high or something. So, you know, can provide a nice opportunity here. Again, it's a semiconductor, so semiconductors right now are moving. So this may just be a short-term move and then a roll. It's a toughie. We'll see if it breaks this area, right? We're in an LVN here at 126. We have lots of supply here above. Hence why I put it on my short-term, you know, chart here. So, all right, workhorse. Yeah, I did review Disney. So Disney would be back probably an hour ago or something. Hour and a half ago. So if you want to just, I'll leave this video up today. It's a little more structured for people, so I'll leave it up. Yeah, I'm not interested in going long workhorse until it fills the gap and then pops back to the upside. So we'll see. You know, I do like it for a long if it enters this gap fill at 1098, right? I've got this showing up on from my weekly chart. So here's the gap I'm talking about. There's another gap down here at $6-7, but I wouldn't be interested in buying it if it comes all the way back down to that level. But this one I would, because you have a consolidation here. If it breaks and then it fakes, so if you get a fake out and then it comes back up into the body, I'd be interested. Small size, holding for I don't know, 5, 6, $7, something like that. It just depends how it moves. This I would be watching a lot of the news, a lot of the fundamentals, yada yada yada. So in terms of a rule of 3, by the way, so talk about various iterations of the rule of 3. This one would be doesn't get there. See that? I've talked about this on Twitter a lot before. So 1, 2, see how it doesn't get to the third trend line? So it rejects before. So I talk about this on the E-mini, right? If the E-mini is moving up, right? And it has, and that's the next thing I chart, then I'm done. Like that. All right, and then you get the second trend line tap, and then it's moving up. And then it does this. It doesn't quite get there. And then it rips. If it finds support above the trend line, it is typically very bullish. So any breakout back up this way, let's say if this is a consolidating area, we'll do yellow. Okay. Let's say that's a consolidating area here above the trend line. Oh, let's make it shorter. That's confusing if it's too close to the trend line. Okay, like that. Let's say it's a consolidating area here. You can buy this here. For a, TP1 is maybe the high, and then leave some for a new high. Typically, it'll go and make a much higher high. So this is a variation on the rule of 3. If, however, we come down and then we make a little bounce, you could short that little bounce typically if it's perfect rule of 3, and then it'll go find liquidity and cover outside here. So too many people start using that, then obviously you're going to get variations on it, especially in Globex. But yeah, just one of the variations of the rule of 3. So anyway, this, thinking of the inverse of this is bearish, right? Doesn't even make, there's liquidity here, but it can't get there, right? Think about that. If you're a market maker, a big player, and you want to position short in this name, where's the liquidity? It's above the trend line. And all the breakout traders go long. So where you can sell into that, all that bid, those breakout trader bid action, you can sell into that, crush the souls of longs, who then capitulate. It moves price back in. It's a failed breakout. You just crush them, but it doesn't even get there, right? So there's always liquidity to be found after a third trend line, above or below, like here. But anyway, a little bit of rot or rule of 3 theory there. So that's what this makes me think about. Wait, I need to keep this on there. It's a nice reminder. There you go. Let's see. Let's just hit the delete button here. Where is it? Oh, I'm getting hungry. Erase button. Jeez, I am hungry. Yes, I am. And my brain needs food. I've been doing this a little long, and I'm not used to talking. I just usually move with speed through this. Okay, next one is Zoom, and then BNGO for I think it was V who asked me about that. So oh, JB, the other book was Technical Analysis of Stock Trends. By Robert D. Edwards and John Meiji. Here, I'll put it in the chat. Technical Analysis of Stock Trends. Zoom. This looks healthy. Looks healthy. I mean, yes, it's made a big move fast, and that's why it's pulling back. But it's healthy. I mean, right? Fib it out, right? We could see what it's doing. You see that? 50%. We're right there. Even if it pulls back to the 618, that's fine. So you can see my note, watch for a false breakdown. It's a nice looking stock. This is a good stock. I mean, it's a good company. A lot of room for growth, I think. Got a little ahead of itself, but it's making waves. It's probably going to pop again. It'll probably come back down. And at which point you want to see if it makes, if it does pop here, you want to see if it makes some sort of, right? Maybe it's resistance here, some longs trapped, right? You got to think, okay, what was the trend line originally? Something like this. Oh, it broke out, it held the trend line. Oh, everyone got excited. And then it failed. And then it failed again. So, if you're holding from here, you're going to want to get out. So that's just the psychology of it. So this may become resistance, right? Maybe. It's likely, right? That's likely resistance. But what you really want to watch is when it pulls back, does it make, relative to this spot here, does it make a higher low, right? If it makes a higher low and then it rips, starts to come up, you can start buying here in anticipation of making a new high. All right, in which case that new high probably would be, something like this, breaking prior resistance, what was probably resistance, so breaking this, maybe getting some stops, and then you probably see some more profiting. So, this will probably move in a very oscillating kind of manner just based on what it's done. So this is a nice tradable stock. I mean, you're not going to trade it perfectly, but you might be able to, just anticipating this, you might be able to outperform the trend by selling into this area and just buying lower. Okay. The key though is, how low do you buy? Where do you place your stop? So you might have a stop here, right? That's consolidation here, so your stop is here. So you're buying into this area. And then, it's probably a 2-to-1. 2-to-1 risk reward. And if you can sell up in this area, but as soon, you got to remember this though. For trend followers, as soon as you get a higher low and it rips to make a new high, everyone's already keyed in. They'll know. You may just hold it because everyone knows. All the trend followers know that in that kind of pattern, sheesh, it's getting muddy. Let me undo this stuff. In this kind of pattern, as soon as you get this, like that, trend followers know, new uptrend. So this move here might come all the way up here before it pulls back. So, you say, oh, well, if it just makes measured moves, oh, this is so easy to outperform the trend. But that's something you have to consider, that it becomes obvious to everyone that we're in a new trend. So when it makes that move, it might just blow this. It might just blow through all of this. So you really have to, okay, if you're trying to outperform the trend, you have to be willing to sell some here, but buy back higher what you sold and keep a runner, right? So it's a different, when you have such a nice looking chart like this, you kind of have to think about those things. Otherwise you turn into like, fuck, I just sold too early and it's ripping and now I want to chase, but I don't want to chase too high. It's a whole thing. So kind of keep that in mind. Anyway, short term, 30-minute, it's, I think, prudent to put a trend line here. Right? So we kind of break out a little bit higher here. There's some supply here. You could see it. A little bit of supply, and it's that like volume node 346. Yeah, it's here. All right, we're right there. We already popped up and came down a little bit. See, even on the daily. So volume node 343. It's right above us here with zoom. So if it breaks up and breaks above this, maybe goes 370, then pulls back and then rips off 350. Good to go. Probably good to go. We're going to come up on the third trend line tap here, so it's rule of three. Uno, dos. I don't know. Can we anticipate tres right here? Foomp. It's actually not a bad stock to get into now with small size. And you guys can get into these stocks if you have small accounts. You're under 25K. You can do it. There's all kinds of companies. Interactive Brokers has commission free and fractional shares. I believe Robinhood has fractional shares. Probably a bunch of others do too now. I don't know. I don't keep track of that. But I know Interactive Brokers for a while there did on some names. I don't know if it's all, but I don't ever use fractional shares. But that's one way to do it. What does Ray Dalio say? Diversify your portfolio, buy the strongest, and hopefully those things aren't correlated as well. So buy the strongest of various sectors that are not correlated. That can protect you from some serious downside. So tough to do, but charting like this can help you to do this. And you know what Zoom does, so think about it. It's not rocket science. It's Zoom. It's going to be around probably for a while, unless it's not, but I think it will be. So yeah, IB's okay. They're all right. All right, BNGO. Let's see. Bionanogenomics. What is this craziness? I don't know. Let's see. It's building it. I haven't looked at it before, so. I like it when it builds the chart. It's helps me to see how it's moved. Downtrend. We know it's in a downtrend. Okay. Not a great chart. Not a great chart. So first thing you want to do is probably, let's just take a look here. You see that? How it held the 618, so typically bullish. Okay, get rid of that. So what's not good about this chart, and I don't know anything about the company, but what's not good about it is here. Let me put this pen on here. So as it goes up, right, it's making higher highs and higher lows. Okay, and then you have this again. We saw it in other charts. You have this false breakout pattern, and then when the pattern fails, it comes all the way down, breaks support, comes up, and it bounces, right? So here it bounces and it comes up, and all of this becomes resistance. See that? Just completely. So this bounce doesn't even do this and come down. Here, let me. All right. Go back here. The bounce doesn't do this or anything. Doesn't even format. It doesn't even make an attempt at a head and shoulders. It just rolls over and makes a lower low, and then when it bounces, it makes another lower high, and right here it's consolidating. So all the volumes here, right? You see that? So the volume is right there. I know someone's typing something, but I'm going to finish my train of thought before I look. So volume is all in this area here. See whoever bought right here, which is all this, whoever bought here looks like they defended. See that? So that's interesting. Okay. Not knowing fundamentals about the company. And volume is kind of, let's see. Let me get rid of that. Get this back. So volume has just fallen off here. Big time. Big time. Okay. But as volume falls, as we pull back, you see this move? A little bit of volume here associated with this. So I find this interesting. Huge, huge buying here. Could be insiders, I don't know. But it's interesting. It's not an incredibly bullish chart, but I wouldn't say that it's, you know, I mean, everything I explained here is not good, right? Still, you know, if it breaks this area here, because you know someone bought in this area. So if it breaks this level, it's toast. But again, without knowing much about the company, that's just the technicals. So held the 618. We're at about, what, 50% here? Yeah, and I'm just, yeah, we're at about 50%. So I've played with fibs for a lot of years, and one thing I've noted to myself is that when a stock hits the 618, if it doesn't bounce to fibs, so if the 618 doesn't bounce to the 38.2 or the 38.2 doesn't reject to the 618, it's not healthy. So in this case, you get a 2 fib bounce. That's what makes me pause, because it's got enough pop to bounce, you know, 6 to 10 essentially. What I'm curious about is, what is the float on this thing? Bio, nano, okay, BNGO. I'll look it up on Thinkorswim. Still haven't looked at the comments. All right, BNGO. Where are you at, BNGO? Okay. Market cap. Da, 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 da. Stocks. All my market cap watch lists are non-editable. They all are part of scans. Okay, current account. Nope. All right. Well, I guess I got to go change it. Here, it's going to take longer than I thought. Okay. So market cap. We'll type cap. There's market cap by dollar. Add it. Add a new column in Thinkorswim. Go add it to the bottom of the watch list. BNGO. Alright, sorting by name, so I gotta go find it, widen it out so I can see how many shares there are. 278 million shares, so lots of outstanding. Yeah, you know what? This isn't terrible. If it was lower float, I would say stay away, but it's not terrible. It's not A++, but it's not terrible. Alright, so BNGO, let's go look at the short interest. BNGO. 8%. I don't know how old this is. Short squeeze. Yeah. It's not a high highly shorted stock either. So no, it's not 8% short interest. It's 8% increase. Or is it 8% total? Let me see. I don't know. It's just not that much. Hey Rick, I'll keep it up permanently for you, man. No problem. Rick, you know I'm honest. Some of my recent live streams, I've been doing a whole thing where I cut out wheat, and I was I was having some mad, crazy withdrawals. I don't know if you've ever read that book, The Wheat Belly. So what is it? What is the protein associated with wheat? It's see, I am really, really hungry right now, and I need food badly. But anyway, there's gliadin. It acts as a neurotransmitter in the brain, and it's highly addictive. So anyway, I was grumpy as hell, and I was not on my best behavior on some of my past live streams, so I was taking them down. I was like, you know what? A little too sensitive, a little easily annoyed. That's one of the detriments of me not charging anything, right? Is that I don't feel the need sometimes to be on good behavior. I'm just like, fuck it. I'm grumpy. But anyway. And confession. All right. So we did BNGO. So it's gliadin, Charles. Gliadin is the small protein. Oh, okay, Rick. Yeah, I'm just being honest about it. So anyway, V. That's what I think. Anyway, back to the e-mini. I'm gonna switch screens really quick because I want to make sure that I don't have something up on my main e-mini charting screen that I don't want to be showing. So I'm here, but you'll see a different screen. It's actually decent. Come on now.
So here they come to sell him again. 9.5 straight night, 20 straight night, even straight here. Now guys, 8 halves are trading as well.
All right. I'm hitting a wall mentally, so fitting music. All right. Almost there. All right. Boom. All right. Is this range for real on the E-mini right now? Is this range for real? What? 0.5 ATRs. Whoa, that's low, even for a holiday, pre-holiday trading session. Holy cow. Okay, let me turn this back on real quick here. All right. Crazy. We don't need to see all that DOM stuff, do we? Oh, sure, why not? We got to get rid of that. Oop. Here we go. All right. There we go. Get this zoomed out. So someone was asking me, is it possible we retrace to 4K? Yeah, of course. Anything's possible. But yeah, we're just, you know, I was bullish since the 235,000 what is going to be T plus 2 on Monday, essentially. 5-minute close. So I've been bullish since then. And someone asked me, well, why were you bullish? So it's up in the chat. Hangry. Yeah, I know. No problem, V, by the way. You guys see this, right? Okay. So I've been bullish since that 200 and whatever 35,000 5-minute contract close, which is highly abnormal. And so someone asked me why on Twitter, and that conversation is right here. I'm gonna, let's see, copy the link address. It's in this chat here on YouTube, so I'll just paste it again. Jeez. Well, that's no bueno. All right, well, I gotta get rid of this. This is ridiculous. Delete. Okay, well, go back in. Right here. What is going on here? Jeez. All right, let's do it again. Copy link to tweet. Copy to clipboard. Should be able to paste it. There it is. So I explained my rationale a little bit. And one of the things that I told Chaz, because, you know, before I don't know, it was a day or two ago that I traded the close here on YouTube. And before I left YouTube, I just mentioned, I think that we're going to, overnight, it's going to be extremely low ATR. It's going to go, there's not going to be a lot of movement. And Chaz on Twitter says later, he's like, man, how did you know? And I said, well, I didn't know for sure, but I had an idea. And that idea comes from the fact that, okay, right, here's our 235,000 contracts here, right? Sorry, let me scroll down here. This is just, I gotta adjust my screens. This main Sierra chart instance has screens off to the right, and it just cuts off my browsers every time I click on it, so I gotta adjust everything. Okay, so the idea being, okay, so this is what I was talking about this session here. I said it's most likely going to be very low ATR, and it'll eventually pop. But essentially, when you get a 235,000 contract close on fairly low movement, so here's the movement: 39.65 up to 39.73, but the body is not huge movement here. I mean, the candle travels a little bit. It's like 8 points or whatever. But where the volume transacted on here in this was right up here at 39.70-ish, 39.69. You can go look at a 1 minute and you'll see where all the volume was transacted. Hence why POC migrated down into the wick of this candle, okay? So what that means is you've got people buying a shit ton. You've got people selling a shit ton. So people are going, again, these are the futures, so you're short or you're long, right? So you're taking a speculative position if you're not hedging with this. So what ends up happening is every time if you think of this bar and where the massive volume transacted in this bar as a value area, right? Everybody who is short, they're going to start taking profit here, right? And then everybody who's long in this bar, they're going to start taking profit. So what you end up having when you have such a high volume of transactions, the consolidation overnight tends to take a lot longer because you have to work through all that volume. You have to work through all those short-term traders. And because the volume is so high, the traders that are either trapped or out of position or in profit, right? People are fucking up and people are right? It causes a balance to develop because of that supply and demand, or because of the position long and short, right? And this and don't get, I mean, you have to understand, people saw the volume on this close, so you don't want to be wrong short term. You don't want to be on the wrong side of this trade, right? So what that's going to cause psychologically for a lot of traders is, hey, when I move into profit, I'm gonna take profit, right? And maybe you get people adding down here because they're like, well, I'm on the right side, right? And then every time you move into profit short term, you get people who are like, well, shit, I'm short and we're now moving above here. I don't want to be wrong because whoever this was, again, it's not one entity, but it's several or a whole bunch of people. But maybe there are a few very, very large players willing to buy this MOC dump, and it doesn't go very far. So this is like an absorptive candle on stupid volume. So my thought was that we were going to get a lot of movement with very low ATRs around this area, and that's what we got. And if you look at the volume all night, look at that. Yeah, you get some, you do, these are 5-minute candles. You get some candles here with a little bit of volume, but every time it breaks down below that area, woof, bought back up with a little bit of volume. And then it just started to, like, you know, we flushed these traders out, and that range was so tight that traders quit participating because it's just, they're getting chopped. Most traders think very linearly. They think, well, balance leads to imbalance, leads to breakout. So there's a lot of traders taking breakouts here and then just getting chopped, okay? Because they're not thinking about the greater context of this close, right? So eventually we popped, but I was very bullish because we're above T+1, we're above T+2, and closes on lows above T+1, above T+2, above structural highs back in here to the left, where the bar, it is not a big travel bar, are typically very bullish. Okay, so couple that with the fact that a lot of what I saw on Twitter was very bearish coming into this, expecting big moves. What I know from experience is that when everybody gets bearish, it pushes up even a little bit more. So someone is willing to spend here, okay? So this move right now, because of that volume transacted, shorts might get squeezed to hell. Yeah, might pull back to 4K, but shorts also may just get ripped right now to the upside, and that won't bother me at all. I welcome that. You know, if we rip straight up to the upside, you know, then I'd be obviously looking to take a counter trend position around a higher time frame trend line. So, you know, this is on a weekly chart. This is where we're at. Okay, you can look at commitments of traders here. You look at it in terms of like just a channel. This is where we are. All right, asset managers, hedge funds are not extremely bullish here. So, you know, there is more room for upside here. Typically, when you get a trend line like this, you know, you go find liquidity. So who knows? I know everybody likes to draw a precise trend line and say, oh, I'm going to short 40, 50. It doesn't typically work out perfectly. Maybe you get a few points, chart points that day, but typically go find liquidity above it. So I'd be looking a little bit higher to get short. I wouldn't be getting short here. But that said, yeah, maybe there's news Sunday and then we gap down. I don't know. Who knows? But that's just from a technical perspective. You got to realize someone was buying the shit out of the E-mini, which, that 235,000 contract quote, which, it tends to act as a proxy for the greater market, because it is an index, and an index is its constituents are just data points, and the more, as you know in statistics, the more data points that you have, the more you can rely on data. That's just how statistics work. If you've taken a basic statistics class, that's something that you immediately can glean from charting an index. So, which is why rule of 3 works so well in the E-mini, because you're talking about an index that a slight variation outside of a trend line is not going to change the whole direction of the trend, right? You're talking about it's got all these constituents that make up the index, right? So a little trend line puncture and everyone gets bearish. Well, it's not a fucking stock, so it's just not the way supply demand works. So it's conversely, you do get incredible fake outs on the E-mini, which is what makes it so fun to trade. So anyway, super low volume, 150 contracts sometimes, 86 contracts. This is chop. So the bots are running. Look, there's a seller here, we see that at 4016.50. there you go, 4016.50. See that? 1,671 positive deltas. In other words, there's someone wanting to sell at 4016.50 to the tune of, whatever this is absorptive wise. Might be multiple traders, we don't know, but there's a big absorption here. So it doesn't mean it's bearish, but just pointing out what I see right now. So hopefully that answers your question. I mean, I'm not that opinionated, because I don't think looking at this overnight chart it's going to give me a lot of information. There's just not enough volume. So anyway, with that, I end the live stream. I hope I hope you guys enjoyed this, and I hope you guys have a really good weekend. And if you're observing the holiday tomorrow, I hope that goes well for you. And please, the more feedback I get from you guys, the more I'm engaged, and probably the more interesting it is for you guys. It can be a challenge for me to talk for an extended amount of time without burnout. So I tend to go through these phases of like a day or two of live streaming, and then if I don't get a very reactive audience, I'm like, I've got a lot of books to read still. I read on a Kindle, and I've got a lot of trading books that I go through. I enjoy it. It's like leisure reading, but at the same time it sharpens me. So anyway, the more you guys interact with me, the more I'll stay engaged, and I hope you guys are enjoying it. I enjoy being on and meeting new people and chatting with you guys. So anyway, if you haven't joined Telegram, I encourage you to do so, just so that you can share your charts with me, because there is no way for me to for you guys to share charts unless you're giving me a link on like TradingView or whatever in the Google live chat, so, or in the YouTube live stream chat. So the Telegram just allows you guys to be able to share charts and have kind of a two-way dialogue. So I haven't really been monitoring it today just because I was totally focused on the equities charting, but a lot of times when I'm focused on the E-mini, then I'll have that open and notifications will be on. But otherwise, I just keep the notifications on that Telegram off. If I see it, Maybe I'm chatting with one of my other buddies on Telegram. Maybe I'll peek into the chat, but most of the time, just know I don't peek into the chat. I don't monitor it during the day. When I'm totally focused on trading my own account, I'm not trying to get anybody a signal or anything like that. So anyway, have a great weekend and peace out. Oh, Charles, it's go to my YouTube main stream, go to my YouTube channel, the main page. On my banner, top right, there's like email, there's Twitter, there's Telegram, there's all kinds of stuff. All right. Anyway, so it's there. Have a good one.